Today, we're talking with Otis Mayberry and National Corporate Credit. What's your position at Corporate Credit?
Yeah. So I'm a senior funding expert here. I've been here for a couple of years now, helping business owners receive funding for their businesses.
Okay, so that's what we want to talk about. I'm going to get a little more volume here. We because there's a number of different ways you can look at when you say funding for businesses. What's the most common? Business
Mhm.
owner needs payroll next week and doesn't have it, or they need equipment. What's your primary?
Mhm. Yeah. So it varies. So yeah, typically they would need money for payroll. I mean, sometimes they're doing renovations. Other times they just want to have capital on hand just in case certain issues arise. So there's various reasons, but we do work with startups as well, predominantly. So it isn't as though you would need a super long time in the business industry in order to achieve the funding that you're looking for.
Okay, so you can help startups as well. And is there a limit as far as how far you can go with a startup?
No. So the good thing about the way we help startups is it more so hinges on the applicant's credit history in the beginning, and then from there you'll essentially just build from your actual personal credit history. So to speak, let's say you come in, you have like a 750 or something like that. We'll still be able to get you business funding. And then from there, you can get limit increases. You can request a lower rate, things of that nature. But your personal credit score will be the starting point in order to achieve that.
Okay, and speaking of lowering the rate, if I come in for a startup loan and let's say I've got great credit, um, but there's no history on the business because it's a startup. Uh,
Mhm.
what kind of parameters are am I going to be looking at as far as how much can I get and what kind of terms as far as interest and amortization schedule?
Yeah, so that's a good question. So, most of our programs pertaining to the term loans, that is, are going to range from anywhere from like 4 to 6 years. Um, and then, as far as what you would need in order to qualify for it, I mean, we keep it simple. If you have a 700 credit score as far as your FICO across the three bureaus, as well as if you gross 50,000 or more, then more often than not, obviously barring any extenuating circumstances like excessive late payments or derogatory accounts, we'll be able to get you funding. Yeah, so typically, I mean, all you would need is a 700 and a gross of 50,000.
Okay, now when you say gross of 50,000, that's you're talking about the amount that I'm going to pay taxes on.
Exactly, yeah. So when you report it, it'll be whatever you report on your annual tax return, as far as what you gross, and yeah, it'll be based upon that.
Okay, so I need more than 50,000
Hmm.
as far as income that is taxable income.
Yeah.
Okay, and then my FICO score. What's the range that I can have and still hope to get some kind of funding?
Yeah. So really, I mean, 700 will be the a good starting point, and then from there, obviously, the better the credit score, the low the initial interest rates will be for you.
Okay. Some people will loan uh, with a credit score as low as 600. Do you ever do that?
So it depends, right? If you're looking for business funding and you're an established business that's bringing in a certain amount of revenue, then absolutely. But since we're going to be dealing predominantly on the unsecured end, as far as our personal funding, then if you were a 600, you would not qualify just because obviously you don't have anything put up as collateral. So it's more so based upon your payment history as well as the strength of your accounts, as well as your credit score all collectively.
Okay, so so if I come and I have uh, low income, I've got I don't make my payments, and I'm asking for a whole bunch of money at a low interest rate, I'm going to have trouble. Is that what you're trying to tell me?
Yeah, more often than not. Yep, more often than not.
One of the things that we talk about is
Hmm.
the fact that it's easier to get funding for an existing business than it
Hmm.
is a startup, just because with the startup you have no history, and you know the statistics show that it's up to an 80% failure rate.
Hmm.
So when I come to the banker and I say, hey, I want to start this business, I got this wonderful idea, the banker really is looking at, well, here's a good chance for me to lose my money.
Yep, yep. Yeah, so that's another thing. I'm glad you touched upon that. So obviously, in America, I think like 61% of Americans would like to be business owners. But like you said, upwards of 80% of businesses do fail. So the lenders we work with, it's all about risk assessment, right? So they don't want to take like if you're a high risk industry, similar to like real estate. I mean, even the restaurant business, believe it or not. Then yeah, I mean they're gonna assess what are the chances of him paying the money back, as well as how much can we truly trust this guy with in order to make sure that we get our money back, because banks aren't in the business of losing money, and that's why they've done so well for
Okay.
so long.
And National Corporate Credit, you are you. I would call you a loan broker. You're not the actual end lender, right?
No, so yeah, we work direct to lender. So we're a capital consulting company. We've been around for over a decade now. So we've cultivated relationships with numerous lenders here, whether it be locally, regionally, or nationwide, that we work with. I guess, individually. And the way that works to your benefit. So obviously, with us being in the industry for now over a decade, our underwriters have seen essentially every type of client that you would submit. And what they do from there is they'll essentially put them in, I guess, for lack of a better term, a bucket where they feel as though not only will the client have the best chances of getting approved for funding, but they will also maximize the funding that they get, right? So some clients wouldn't qualify for some lenders, whereas others will. Meaning, like let's say if you're a 710, instead of just going and putting you with random lenders, we'd put you with lenders that we know we've had success with people in your similar credit profile,
Okay.
if that
All right.
makes sense.
So let me paint a hypothetical. Let's say that I have a 700 plus FICO score,
Hmm.
and I'm not making a lot of money,
Hmm.
but I have found this fantastic business to buy. They want $1 million for it, and it's generating a after pre-tax net income of like $700,000. Uh, what's my chance?
It depends, right? So it's all subjective, and it'll depend on the business's credentials, as well as their track record as far as what you're acquiring. But yeah, it's definitely a chance. We deal with business acquisitions all the time. It just varies depending on the business, the industry it's in, and then what they've done in the past.
Okay, so well, I'll give you an example here. Let's see this one. Here's a business, and they've been in business for um, 10 years,
Mm-hmm.
and they're asking $500,000 for it. They've got a cash flow of just under $200,000. So if I come to you and I've got, say I've got a 680 FICO score. Here's a business that's doing well. They've been growing. They've been around for 10 years, so they've kind of gone past that 10-year danger zone
Hmm.
for the failure rate. After debt service, it's looking like $85,000 net after debt service. Would that be
Hmm.
a good prospect for your company?
Definitely, definitely. And the good thing about us as well, as the lenders that we work with locally, regionally, and nationally, is we have our own private investors too. So our angel investors take on clients like that, where they'll feel as though, hey, this is worth our time to make our money back, where I guess typical conventional lenders wouldn't. You know what I mean?
So the big thing is it needs to make sense.
Exactly, yeah. If it's something where you're guaranteed a profit, like you just spoke about, 10 years plus in the industry, flipping a profit, then yeah, one of our angel investors would definitely, if it piques their interest, they'll definitely be willing to invest in it. Uh, that typically those type of situations, the I guess the for lack of a better term, the typical lenders that we know about probably will feel like, hey, that's kind of a risk. But that's the good thing about having angel investors is we can go to them individually and lay it all out, and then from there see if they'd be willing to invest in it.
Okay. If I'm going to come uh, to you for help, I need to have my ducks in a row.
Absolutely,
Okay.
absolutely, yeah.
So
And the more
name,
paperwork, the better.
okay. So name some of the ducks that you need.
I mean, if we're looking, you're referencing on the business end, right?
Yes.
Yeah, so we would just need 6 months of the business's bank statements. And really, that's it, man. 6 months of the business bank statements and then the ID. That'll get us started as far as like seeing if this is something that we'd be willing to work with. And then from there, there'll be additional documentation needed after that point. Um, I don't want to overwhelm people with telling them to submit everything up front, and then there's a chance that people may not be interested as far as investing in it. So yeah, if you submit the previous 6 months and they can look at it and say, okay, they're sustaining a certain amount of revenue per
Okay.
month, then they definitely be a lot more susceptible to just investing in it.
Okay. Now, let's say that we bring you the 6 months of bank statements, so you can see, okay, yes, this is looking good. Then, are you going to want ultimately? Are you going to want 3 years of tax returns for the business?
Yeah, so that's when we'll get into more extensive documentation, depending on what the angel investor wants to see from the client. But yeah, that's when you'll start getting into the years of the tax returns of the business and things of that nature. Exactly.
Okay. And what about the typical pitch deck? Is that something that helps?
What do you mean? What?
Well, if the borrower or wannabe borrower has done a complete analysis of the business and the industry,
Mhm.
they put it together in a formal presentation, charts
Oh
and
yeah.
graphs and statistics. Pitch deck
Oh
is
yeah, 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 yeah. That's definitely the most useful. Yeah, because then you'll paint the entirety of the picture for the investor, which obviously, like we were saying earlier, the more details, the more documents, the better. I mean, yeah, you'd want them to see the full scale of everything, just so they know that it's a sure thing, and it's not a real gamble.
okay. What about the potential of overwhelming the investor? It because, for example, this sheet of paper is one sheet of paper, and it lays it out. This is what they're making. This is their gross revenue. This is what they want.
Hmm.
That's fairly simple. Doesn't take me long to go through it.
Yeah.
On the other hand, if I come in with a book, the
Yeah.
investor is not really gonna want to wade through all of that.
Yeah, yeah, and that's a good point you brought that up. Yeah, let's try to be thorough with the documents, but let's not try to inundate them with, unnecessary things where they are, where it's very tedious to go over everything,
Okay. So Otis, would it make sense then to plan a presentation with, all right, here's my down and dirty. This is an outline of the deal. Uh,
Hmm.
this is what I have as far as my FICO, my um, credit history, my income history. Just a simple synopsis,
Yeah, yep, yep.
and then you look at that and you say, yeah, we take a look at that. Then I could come in with additional another level
Yeah,
of
the full
the
scale of things.
documentation.
Yeah. Yeah,
Okay.
yeah, yeah. Yeah, so yeah, initially, if they could minimize it and keep it, I mean, obviously, so it isn't a burden for them as well, just because you never know if they're going to want to take it on or not. But yeah, if they can submit just minimal documents at first, just so we can see the revenue and the longevity of the business, and then from there, yeah, they can send the full scale of the documents that we would need.
Okay, so as you know, my job is helping people uh, buy a business rather than
Mhm,
starting a business, because there is that 80% failure risk. Doesn't matter
mhm,
how great your idea is, things can go wrong in that startup phase. So I tell my clients, don't buy or don't start a business, rather buy a business.
mhm. Yeah.
Okay. So now, if after I've done 47 deals with National Credit, or National Corporate Credit, then when I come to you with a deal, am I likely to get better response than somebody that's coming in for the first time?
Um,
That's a trick question, by the way.
uh, yeah, I'm trying to, honestly, it's not like, I mean, your clients would get prioritized. It just has to make sense, right? Everyone gets a fair shot at it. It just has to make sense for the investors, really, man.
Okay.
So, yeah, it's not as though like we'll say, well, he's submitted 48 deals, so we should loan this guy the money. I mean, at the end of the day, these are angel investors. They don't care about how many deals you submit. They care about getting their money back.
All right.
So it has to make sense at all times. So.
Okay. So, Otis, if I were to ask you, what is the single most important thing for an applicant to bring to you up front, what would that be?
Honestly, I'll say just the 700 credit score, right? I know, especially in the social media age we're in, a lot of people have been misinformed into believing that they don't need personal credit. They can use their business credit and just get 50,000 a loan. And it's just not true, right? Especially when you're a startup, you'd want your personal credit score to be over 700. And then from there, you'll leverage that into getting business funding. And then from there, you'll grow the business funding based upon that. But always, first and foremost, is your personal credit score, which is going to be the most, I guess, the most scrutinized thing of all. You know what I mean? You can make $100,000 a year if you're a 580 credit score, nobody's going to loan you a dollar. You know what I mean? So that's the number one thing.
Okay. And you mentioned, the online and all those things. What would you do as a applicant if somebody is offering you a $500,000 loan at 4% interest? What would be your first thought?
Um, I mean, I mean, it depends on the applicant, right? If you got like a 700 credit score and you're making 60,000 a year and someone does that, I mean, I would be skeptical just because if it sounds too good to be true, it typically is. But I mean, I guess in that situation, it's all subjective. I mean, I've helped people get like 300,000. You know what I mean?
Okay,
If
but
they
I'm
were,
talking about the interest rate. If somebody's
yeah, that
offering to
does
loan you
in
money
this
at four
climate. That's
percent,
not happening. That's not happening in this economy, unfortunately. 4% is not even. I think they start at like 6%. So, and then with homes, they start at 8%. So it's not. Yeah, in this economy, I would think that would raise a red flag for me, definitely.
yeah. Okay. All right. Anything else you want to say to my clients who are wanting to buy an existing thriving business?
Mhm. Yeah, I would say it's a great idea. Definitely because I mean, you've already developed credibility as far as just having 10 years plus in the business if you get a business like that. So it's definitely a great idea. But with that, always keep in mind, keep your personal credit score up as well. And you can combine those two, then I mean, you're starting off better than 90% of everyone else that starts a business, definitely.
Okay. All right. Great. Well, Otis, thank you very much for your time today. I
Absolutely.
appreciate it. My clients appreciate it. And
Absolutely.
we'll look forward to doing more business with you.
Definitely. Definitely. Thanks for your time,
You
WL. I
bet. Have a
appreciate it.
great day.
All
Bye.
right, you as well. Thanks.